Hi, this is John Hayes at the International Franchise Expo at the Javits Center in New York City. Welcome to howtobuyafranchise.com and to the How to Buy a Franchise show. And if you're tuning in from iTunes or Stitcher Radio, welcome to you as well. It's a pleasure to have you with us, and it's a pleasure to have Jeff Sherry, the Senior Vice President of 44 Business Capital, a division of Berkshire Bank. They are a direct lender, SBA lender, and we're going to talk about what's involved and how this makes sense for you. But first, I want to remind you, franchising is not for everybody. Franchising is a powerful methodology. It's the best way for people to move their products and services using other people who are serving as franchisees. But you might not be a good fit for franchising. So first step is to find out if you are a good fit. If you are a good fit, then what kind of franchise is going to work for you? And here at the International Franchise Expo, there are some 400 franchise opportunities that range in investment from below $10,000 to up to $1 million and $2 or $3 million. And those kind of folks who are going to buy those businesses are going to need some lending help. So it's good to have Jeff with us today. So you got to make sure you're a good fit for franchising, and then find a franchise business that's a good fit for you. And then if you're going to need some help financially, find a lender who's going to be a good fit for you. And Jeff, let's talk about that. So a little bit of background. You were in the loan business early on,
Sure.
And then you got into direct lending.
Correct.
Not necessarily just the franchisees, but you liked the franchise space.
Yes, we were always in. My partner started a company called 44 Financial back in 1987. I joined him in 1990, and we specialized in financing small businesses. Small businesses are often overlooked by the banks and often need help getting themselves ready to obtain financing, and then actually finding various lenders and creating a competitive environment for small businesses to get a good deal.
Yeah.
So we did a variety of things there, and in 2008, 2009, when the financial sector was really, really hurt, we became a direct lender by virtue of partnering with a small bank and focusing on SBA, because that was a sector really, really overlooked, and we found a need there where we could fulfill by helping small businesses start with startups, finance their businesses, help people change careers, and it was very successful until the time now where we've been acquired by a bank called Berkshire Bank out of Pittsfield, Massachusetts, and now we are a division of them, and we specialize in SBA financing, not just to franchises, but to all kinds of businesses. However, franchises lend themselves really well to SBA financing. SBA is built perfectly for franchises.
Yes. Historically, SBA has been gung-ho about franchising. And partly because, and you back me up on this, or you say it's not true if it's not true, franchises by and large can be very successful. They can have a good success rate because there is a system. You don't have to create the system for yourself. A lot of people want to get into business, and a lot of people do it on their own, and a lot of people lose their shirt and all their money as well,
right,
because they don't have a system. They don't know how to build a system.
Correct.
They don't know how to bring in customers. They don't know how to keep customers. They don't know how to deal with their vendors. All the problems that a good franchisor, and I'm underlining a good franchisor because all franchisors are not created equal, some are better than others. A good franchisor works out that system and says, look, Jeff, if you follow my system, you're going to be successful.
Right.
So SBA likes that. You like that.
We love that because everything you just said and the word system resonates.
Yeah.
And we underwrite, when we look at a deal, we look at the franchisor first. Does this concept make sense? And many of them do, some don't, but as you said earlier, that person has to be matched up nicely for that particular niche that they want to get in. We do love the systems, and we have a very good track record, because in any SBA lending scenario, we typically are unsecured. We're not always secure with real estate. It's a lot of times a leasehold. So we have to have great confidence in the system, because at the end of the day, if that loan goes bad, and they do, okay, from time to time, we have to have some way to fall back, and collateral is not one way to get your money back. Most of the franchises, I would say well over 95% of the franchises we finance are successful because of the systems in place.
Exactly. Okay,
Yeah.
that makes sense. And I know that SBA likes that. It makes sense. Lenders like it. Leasing companies like it. It makes sense. Banks like it because that all makes sense. But you mentioned something, and I want to touch on this very quickly because it's one of my areas that I emphasize. How do you know if a guy is a good fit for a particular franchise? How do you know he's a good fit psychologically, behaviorally? He's got the skills that are going to be needed to succeed in that franchise. Do you have a way of telling? Do you care? Or?
Well, we do care. There's no science to it. There's kind of a, there's certain franchises that have their own way of pre-qualifying a client to know if they're a good fit. The larger the dollar amount, the more sophisticated it is. And that's not to knock a small franchise, because there's plenty of them. So we know when we like to see somebody who is not putting their very last nickel into their deal. That doesn't mean they have to be really, really wealthy, but we get people that their resume might not match up with that particular field of work, but they have a 401k, they have some other monies they can fall back on. They have thought it out. They give us a business plan. We ask them to complete a business plan, and we can tell by that business plan whether they've really thought through these things. If not, we suggest that they get good coaching.
Okay. Do you depend on the franchisor to make sure the fit exists?
Sometimes, yes. Again, the larger the dollar amount, the more critical. I could mention the name of a franchise. I don't know if that's
You can,
proper.
go ahead.
Golden Corral.
Yeah.
We've done several Golden Corrals.
All right.
They are $4 and $5 million investments.
Those are big investments.
And people go, wow, how do you make money at that? Well, they do. It's a wildly successful, but they'll screen people out really well because there has to be you talk about a consistent methodology to how things are done. Someone walking in with prior restaurant experience might not be the best fit because of maybe different habits, not necessarily bad habits.
Exactly.
But Mako, if you are a mechanic or you fix cars, you're not necessarily the right guy for them.
Exactly, right.
And things like that. They're the little nuances there. So yes, to answer your question, the larger the dollar amount, the more the franchisor helps us. On the smaller side, again, we kind of size people up individually. Most people going to get in the franchise business are family oriented. They want to build this for their family, we find. They might be leaving corporate America, but we always look at their business plan. How much sense does it make? And on a face-to-face basis say, this guy's capable, he's thought through his projections with the help of the franchisor, but usually some coaching and some outside consultants perhaps sometimes,
So you've mentioned the business plan a couple of times.
Yes.
And many of the people who come to me, many of the people who I coach will say, I've never done it. I don't know how to do a business plan.
Right.
And is it going to cost me $10,000 to go get a business plan? I don't want to do that.
Right. I highly recommend it to prospective franchisees who may seem a little lost.
Okay.
And I think it's a great thing to do.
But they don't have to pay $10,000 to get a business plan.
No.
So, SBA, once again, SCORE, the Senior Corps of Retired Executives, the Small Business Development Centers. Go to sba.gov, and you can find out information. So on a typical Saturday in Philadelphia, where you're located, the SBDC at Temple University or at Drexel University, I don't know who all has an SBDC there now, but at least one of those SBDCs is teaching business planning on Saturday morning at 9 o'clock for $25 through the Small Business Development Center, and maybe the trainer is a SCORE advisor, a Senior Corps Retired Executives. If you can't afford $25, you're not interested in talking to somebody, and for that $25, they're going to step you through how to prepare a business plan.
It's an excellent point, and I'll tell you, we just came back from our Philadelphia Regional Awards. There were about 10 awards given out. I think 7 of them came through an SBDC.
Okay.
I think these were franchisees of the year in a particular space.
Okay.
And all 7 of those 10 were.
And was this a business or one business?
Individual businesses.
Okay.
Who had won those awards had done exactly what you said. They went to an SBDC to get started.
Exactly. That makes sense. Go to the SBDC, pay whatever the fee is.
Right.
Go to a SCORE executive, ask them to coach you, help you. It's not. There's no mystery to the business plan. The franchisor will give you a pro forma to complete for a business plan generally, and the franchisor, depending on whether or not they filed an item 19, may or may not be helpful with you, because franchisors get skittish about making any kind of a financial claim or looking like they helped you prepare a business plan that later you can't fulfill, and then you don't make the money, that even enough money to pay back the loan, and you're going to blame the franchisor. So franchisors want to stay out of that, and they do generally, but a franchisor who files an item 19 is in a better position to be able to help. Of course, franchisees can help you. So if you don't know how to complete a business plan, and you find a franchisee who's been, 3 or 4 or 10 years at it, and the franchisee, you get friendly with that franchisee might say, look, let me look over your shoulder. But it's a good exercise for everybody to do their own business plan.
Absolutely.
Yeah.
Absolutely.
So now, let's say I do a business plan, and I come to you because I'm going to buy ABC franchise, doesn't matter what it is, and let's say it's going to be a $600,000 investment. And I was thinking I was going to do something in maybe the 200 or 250 range, but I found a business that I think is perfect for me. It's going to be 650,000. I can't afford it. I need some help to do that. I come to you. Am I a good candidate so far?
You could be.
Yeah.
You could be, sure.
And what would make me not a good candidate?
Well, if you came in and you really had no understanding of your own personal net worth or your own personal financial situation. So the first thing we do is, especially when I find a candidate who's looking at various franchises, they're not sure, I say, let's get you on file now. We sit with them. I get 3 years of their tax returns, and I have them complete a personal financial statement. And a lot of times they really don't know how to fill that out properly. We do that first and walk them through that so we can look at exactly the investment they would need to make. And again, it's just our style of lending. We don't like to see anybody put their last nickel into a franchise. We like to look at how can we hedge this for them and perhaps give them a little bit more money, maybe some extra working capital in a deal. We look at things differently than the average conventional banker. A banker looks at the deal, the collateral and whatnot. We look at the project. Your 600 might consist of 50 for the 20, 30, 40 for the franchise fee. There might be 150 or 200 of construction. There might be 150 of inventory. Whatever that is, we typically like to add in working capital. And that's the key thing of SBA, is that you can leverage a deal properly to get someone off the ground, give them a little gas in the tank, and I still know that he might have a little something left over in his 401k, because rainy days do come in any franchise. So that's the first thing we do, is start with them. Then you can go shop, and here's the range I think you should stay in. Okay. That kind of thing.
All right. So let's say that I'm on track. I'm thinking that, it looks like I'm a good candidate for you. Again, I'm looking at an investment with working capital that I need about $650,000. Will leasing companies help me if I need vehicles, for example, or equipment? And will you do that? Will you lead me to those people, or do I have to go to them myself?
No, we would certainly lead you to them. If leasing for a portion of your business makes sense, we absolutely will lead you to that, especially if it makes the metrics on our side look better. We will, many times, look at the deal and then try to break a piece out where it makes more sense. We always like to see enough money still in the borrower's pocket to continue to run and fuel the business.
Okay. And then I think it's important to remind people, or maybe some people who don't know, they think that the United States Small Business Administration actually gives them the $600,000 or the amount of money. But the SBA guarantees Berkshire Bank.
Right.
So Berkshire Bank is going to give you the 600, the 650,000 in my case.
Yep.
And the SBA is going to guarantee that loan for Berkshire, because you are an SBA lender. You're approved. You know what SBA requires.
Sure.
So you're going to cross all the T's and dot all the I's.
Absolutely.
To make sure that SBA will in fact want to back up this loan.
Right, and that's when we also start, where we underwrite the franchise itself to make sure it's eligible. That's number one. Then we underwrite the individual, so we can look at that, because when you're talking about a franchise, there's usually startups.
Yeah.
Okay. Now it might be his second unit or her second unit, but usually it's a new concept, which
Yeah.
is excellent. SBA loves it. Our guarantee is only carries us after the default stage. You know, it goes to if the loan is to go to
Yeah.
default, and that's why we always like a proper equity injection. We are a preferred lender, so there isn't a hard and fast rule of what we can do. I've done franchises with no collateral, with as little as 15% in a deal, maybe 10% in a deal. Others with 20 or 30. It all depends on what the person's personal financial situation is. Now, one major rule that any potential franchisee should know is that where an SBA loan is involved, again, there's a lack of collateral. We have to have a position on their personal assets. For instance, a junior lien on their home. They've got to know that that's just a hard and fast rule. If they're ever talking to a lender who says, oh no, we don't need that, be careful, because at the end they'll say, oh wait, by the way, I need that. We disclose everything up front, and most lenders do, that I might only require that franchisee to put 15% in the deal, which is light, but they've got a home with a lot of equity in it, rather than use a home equity line of credit, and that's another option. If that's cheaper, we'll encourage them to do that. We'll just take a position on the home. Okay. So again, each deal has its own footprint, but I think borrowers need to know that personal collateral in most franchise situations is required due to a lack of collateral. So,
okay. So that's where I was going next. I want to know when I need this $650,000.
Right.
I don't have any money. Can I depend on you to help me, Jeff? And I don't have any money.
If you don't have any, that's very tough.
Okay.
That's very tough. Now, what
All
you
right.
can do is you can get investors. You can get partners. Anybody who owns 20% of your company has to guarantee our loan personally.
Okay.
But I will tell you that if you have zero to put in the deal, we
You don't want to talk
very
to me.
rarely. Well, I'll talk. No, here's the thing. I will talk to you, kind of
Yeah.
coach you as to how
Yeah.
you can get some investors. But right
Yeah.
now, if you don't, we want borrowers to have skin in the game.
Yes.
And they're really the most successful
Yeah.
cases.
So, and then I think you've answered this already, but just
Yeah.
to clarify for people,
Right.
if I've got $10,000, or if I've got $70,000, maybe $100,000, now I'm looking better to you.
Yes. Oh, absolutely.
Yeah.
Absolutely.
Okay.
Yeah.
So I can do a $650,000, $600,000 deal, and I've only got 10 or 12% to put in myself. I've got some other money,
Sure.
but I don't want to touch that.
Sure.
And I do have a house that has some equity in it.
Yep. We would definitely look at you very seriously
Okay.
on that. Yep.
All right. So now, I want you to talk about the franchise registry
Right.
that is famous with the SBA, because
Right.
this is sort of the secret code
Yeah.
that the SBA, and you can do this, you can look in the secret code and find out, is ABC franchise any good?
Right.
Should we even be lending? Should we even be talking if you're going to buy that kind? Tell us about that.
Yeah, and that goes back to my first point of we look at the franchise or first.
Okay, yes.
And the registry is part of that. What
Yeah.
we get default rates and we get fallout rates. There's
Yeah.
a difference. Default rates can be 20%. But I said fallout, I meant charge-off. The charge-off rate could be less than 1%. So that's a big difference. Quality franchises, usually very low numbers. But we don't get afraid of a high number on the default side, as long as the charge-off number is lower. That means as a as a lender to a franchisee, I can get out of that deal. So, but the registry gives us good stats on how many units are operating, how many units, again, go into default with just SBA loans, and then how many ultimately charge off. So yeah, we take that into consideration. But as a PLP lender, there's no hard and fast rule. We look at each deal on a deal-by-deal basis. We've made loans with extremely high default rates and extremely high charge-off rates. However, there were anomalies.
Okay.
There was an area in the part of the country where 4 or 5 of the same franchise went down, owned by one guy.
Oh, okay.
And that skews the numbers.
Yeah.
That's not typical,
Yes.
and doesn't identify the rest
Yeah.
of the franchise.
So to clarify this a little bit more
Yeah.
for people, every franchise that has a history of lending with SBA is in this franchise registry.
Yes.
And the SBA tracks, let's say it's called ABC franchise, the SBA tracks the rate of performance of those notes.
Yes.
And the franchisee has failed to pay back the note, this is a problem. So
Sure.
you want to know if there's been a default. And then what's the difference between default and charge-off?
Well, default is that the borrower stopped paying. And typically at the 90-day level, that's when the guarantee will kick into the lender to help them recuperate their dollars. However, it's incumbent upon the lender to go get the rest back to pay the government back.
Okay.
So the charge-off means that very good franchisors, we as a lender have the ability to go in there, control the operation, and they'll put another borrower in.
I see.
Who gets us whole. So a charge-off means you got your money back.
Okay.
Ultimately, even after the default.
Okay. So you can go look up any franchise that has any history with SBA.
Yes.
Can the public do that? Can I go look and see this franchise registry?
Yes.
Okay.
Yes, you can.
So it's not as secret as people think.
Well,
so,
it is a secret, but
yeah.
You have the answer to this.
How would I go look?
Well, I would call a company. I would call somebody like you first.
Yeah.
But I would call a company like Fran Data.
Yes.
Is a good company.
Yeah.
And I believe you can access that information publicly. I think you can get it at SBA.gov. It's easy for me because I'm in the business and I press a button. I have a software channel, but I believe the public can't get that from SBA.
But this is good to know because if I'm talking to you about getting a loan, and I say, hey Jeff, first thing, tell me about the history of this franchise I want to buy.
Right.
Because that's helpful information for
Absolutely.
me as well. Okay, then. So we've covered that I want $650,000.
Right.
And, if I've got 10%, 12%, if 20% would be better. What about my 401k? What about my retirement fund? Do you use that? There's the rollover of those funds to convert into a capital for investing in a business. Or do you do that? Is that part of your strategy?
You can do that, and it's a very, very good strategy, especially if there's a lot in that 401k. It's a great way to convert your dollars.
Yeah.
You need to employ the services of a company that does that. You mentioned company.
Yeah, Fran Fund, for example.
Fran Fund, Bennett Trends,
yes.
or some. We typically don't steer people to that unless they need it. Someone who has thought that through. Their accountant has steered them.
Yes.
Their coach, their consultant has steered them. But it's a great way to use your own money, inject equity into your own business.
Yes.
You've got skin in the game, and we love that.
Okay, good. So that also helps me collateralize my bigger note that I need with you.
Yes.
That maybe my 401k isn't that big, but
Right.
I'm going to convert it into capital for my business. I'm going to use Jeff Sieber, one of my friends at Fran Fund,
Sure.
To do this, or the guys at Bennett Trends to do this. Okay, so that's a good approach. So then, why do you say no to people? Other than they don't have enough money, why are you going to say, no, sorry, we can't lend you any money?
Well, we will say no to people again if there's just not enough equity or commitment in the deal.
Okay.
Bad credit.
Okay.
Some people have some very spotty credit, maybe a previous bankruptcy, maybe from a couple years ago. We need to know the whole story.
So you're not going to loan Trump any money since he's had some previous bankruptcies?
Trump's going to get nothing from us. He's not getting anything. Unfortunately, he doesn't need my money.
He's not knocking on your door.
He doesn't need my money.
He can buy the bank.
Right. That's exactly right.
All right. So there are some good reasons why people get turned down. But do most people get turned down, or what's your ratio?
Our ratio, what we would categorize as a turn down is someone who's actually made application. We have very few turn downs.
Okay.
But we try to help people in the early stages to categorize and tell them, hey, we wouldn't be able to help you in this dollar frame.
Okay.
Maybe in this dollar frame. So we try to screen them out to save their time and ours.
Okay.
So very few turn downs once we get them in.
And once I get into this process, is the bank going to call me? Is Berkshire going to call me to say, we need to talk to you about your loan, or are you going to cover that for me? Because I don't know how to talk to the banker.
No, you deal with us.
You are the banker.
You deal with us. You
Yes.
deal with us, and we have a staff of people. And I'll give you simply how we work. The front end guy, the sales guy, if you will, meets with the borrower, the prospective borrower, and gets everything started. He takes everything in. We agree internally to do the deal. A term sheet is produced. Everything we talk about is written down, rates and terms. Once the borrower accepts that, it moves down the line to an underwriting team who the salesman stays in close contact with. Once that we have a formal approval, we then give them a commitment letter that moves down to a closer. We have specialists along the way. At all times, this salesman's in touch with the borrower. We let the underwriter speak to them. We let the closer speak to them. great thing about email today is you can have a 5-way conversation, and we're very efficient. So we're always with the borrower, as most lenders should be, especially if it's a first-time franchisee.
That's a scary thing for a
well,
first-timer.
It is, and honestly, SBA, there's some documentation involved. There's the Patriot Act. There's you name an act that the government has. A form has to be signed. We walk them right through that.
Yeah.
And they will get a package from our underwriters with sign here slips everywhere. They'll know exactly where to sign, what to do, every document, because it does need to be explained.
Okay.
So that's the
from beginning to end. How long is it going to take?
I would say beginning to end. Beginning meaning the day you get that information in from a borrower, 60 days.
Okay.
Tops.
To get my money.
To get your loan.
Okay.
60 days for a PLP lender.
Okay.
And there's a difference. If you're
PLP
not preferred lending provider.
Okay.
If you're not PLP lender, you have to go to SBA for approval on that deal, which is known as GP. That takes a little longer.
All right.
There's the other thing. One more thing I'll mention is that an SBA lender may seek an exception to rule, an exception to policy SBA. You can get that exception. Even if you're PLP, you must go GP. That can add 2 weeks to the process.
But 60 days basically.
Should be all in
but
if you're...
How much time is it going to take me to get all that stuff together that you need? Or that SBA wants?
If you start with the borrower and you start with a basic checklist up front, which we do, the sales guys do a great job with the basic checklist. That's 80% of what you need right there. The rest is sign and move. Check boxes. It's a little bit more intimidating than it really is. Some of the forms are you a U.S. citizen? Check, check, check. But when you first see it as a borrower, there might be 5 pages there. 2 of them are disclosures.
Yeah.
It's a little bit more intimidating than it really is. Some people need help, some people don't. Many times an accountant is working with them on their projections and whatnot. So each situation is different, but it's not as bad as it seems. As long as you should always seek a PLP lender if you can for SBA, and it just helps streamline the process a little bit.
What's hot now? What's what do people want to get financed these days?
In the franchise world?
Yeah, in franchising.
I'll tell you, burgers.
Okay,
a lot
still
of burgers.
hot.
Burgers are in this country. Smoothies, fresh fast food is hot. The Golden Corrals are hot. They're always hot. I think a lot of new business services. Just in this show, I saw a lot of really new, interesting business services. I saw an environmental company down here. I saw a garage company. I saw a lot of internet marketing companies that are franchised.
Yes.
I see a lot of new B2B service companies, which I think have a very good price point.
Yeah.
Especially for someone who wants to get in the game.
And you mentioned earlier, but I want to emphasize this. If I'm a franchisee and I've been successful in one Golden Corral, we'll use Golden Corral, and I say, hey, I think I want a second Golden Corral, it's going to be easier for me to get that second loan.
Absolutely.
Why? Because I'm a proven entity.
You're experienced. You're a proven entity. Now, I will say this. One of the Golden Corrals, we're in the middle of financing now. Golden Corral is typically a step up from people who are in the food space but have Subway, a burger place, Dunkin' Donuts, and they usually have a partner because it's a big financial play.
Yes.
That's usually a step up. But yes, if you're going to do your next one, it's usually easier. Remember, with SBA, there's a $5 million cap. So if you do a couple of these big guys, you're pretty much hitting your head on the ceiling of what you can do SBA. But at that point, multiple unit owners, now they can walk into a bank and get what they want.
Okay.
I would say if you can walk into a bank and get what you want on your terms, you don't need me.
Okay, good. So what's the percentage of franchised and non-franchised loans that you do?
Franchise to non-franchise. I would say right now, but as a company, I'd say 80% of what we do is non-franchise, just because of the volume of loans we see. And we're trying to always stay in the franchise space because it's solid business. Again, it's perfectly suited for SBA, and we're trying to grow that 80-20 out to maybe a 70-30 as a company.
So you want to increase your interest, and
Absolutely.
that's why you're here at the International Franchise Expo.
That's why I'm here.
Yeah,
that's
great.
why I'm here to meet.
Well, Jeff, it's been very enlightening. This is really going to help my crowd of people understand what do I got to do if I need to get a loan.
Right.
It's not as bad as it might appear to be without some education, which you just provided to us, and I appreciate that very much. We're at the International Franchise Expo, and Jeff Sherry, who's with 44 Business Capital, which is now a division of Berkshire Bank. By the way, you're a national lender.
We are.
You're a national lender,
We are
so
now, yes.
so you don't have to be. While Philadelphia, in my opinion, is the greatest city in the world.
Thank you.
I'm a Temple University graduate.
Oh, awesome.
My PhD is from there. I love Philadelphia. Headed to Philadelphia after the IFE, as a matter of fact.
I'm a Villanova guy. Don't hold that
Okay,
against
good.
me.
I
all
won't
right?
hold that against you. At any rate, Jeff can help you no matter where you are in the country. If you're looking at a need for a loan to acquire a franchise opportunity, SBA lending is probably the way for you to go. The Small Business Administration has always been very enthusiastic about franchises simply because franchises have a good, proven track record, and it's easy for SBA to keep track through that franchise registry of how those notes are performing out in the franchise marketplace. So if you've tuned in on iTunes or you joined us on Stitcher Radio, thank you. Please give us a good review on both iTunes and Stitcher Radio. It helps us to get more listeners and to get more viewers at howtobuyafranchise.com. I'm John Hayes. I'll talk to you again soon. Thank you.
Thank you for listening to How to Buy a Franchise Show. If you want immediate assistance, visit howtobuyafranchise.com to contact Dr. John Hayes for a free consultation.